Hello, this is Brian Shannon from AlphaTrends.net. Today's Friday, the 9th of May, 2008. The market's closed, and the S&P 500 did finish with a slight loss here today, down 57 cents. It continues to be in a very critical area from this weekly time frame, as it is an important level of prior support up near this 143, 144 level, and it's also below this declining 200-day moving average, which it's come up to on decreasing volume, which leaves it vulnerable technically on the weekly time frame. And it's kind of come up here without really much of a, it's come up pretty steadily, that is, without much of a sell-off in between. So we saw that this is, I've got once again another bad print in here that comes in at the end of the day. I don't know what that is. But this market closed right above the rising 20-day moving average right now. And when we look at the 30-minute time frame, we can see that the trend line that we've been looking at in here, it was kind of questionable whether it was really broken or not yesterday. I think today you can definitively say that we are below that. And now this market is also clearly showing this pattern of lower highs and lower lows. Now our important levels of potential support continue to be at about 138 or so, and then down near 137 is going to be the more important level, I think. And still, I do think that even a test of the 50-day moving average would not be unusual or bad for this market. What I've failed to mention in here recently also is that this market has approached the 50% level of the from the highs back in October to the January and mid-March lows. So this would be a 38.2% correction of that move, and here would be the 50% retracement of this larger range right in here. So to bring it up to 61.8 would bring it up to about 146. And again, I'll just draw these levels in because we've been watching them. We've got this downtrend line and the December lows that come into play pretty close to, near that area of the declining 200-day moving average. We're longer term on the daily time frame. We're in this little channel, it looks like, and certainly a move down towards the lower end of that channel wouldn't be an unhealthy thing for this market, and that would bring it down to that 135.5 level where we find that 50-day moving average as well. So shorter term, we do have a pattern of lower highs and lower lows, and the sellers are in control here. For the intermediate term, where we see a declining 5-day moving average, as I said yesterday, the odds do favor further short-term weakness. And the daily time frame looks bullish, but the weekly is questionable. So pays most, the best bet, in other words, here when we have mixed messages from different time frames is to go slow, be careful. It's a trader's environment. And if that sounds non-committal, it's because it's not committal to anything more than the short-term trends. Because that's the only thing that's going to pay you right now. To stick your neck out on the line at a very important longer-term point like this really doesn't pay longer-term, after time. The people who are making big bets will, without evidence, in other words, on the long side, I think, are the ones that are taking the bigger risk in here. To me, it seems the lower risk bet here on the weekly time frames is that we'll probably head lower again because we're below these key levels of support at 73 on the IWM, which has been acting as resistance. We're also below the declining 200-day moving average. We've seen that this trend line was broken this week, and it continues to hold above that. So there's one encouraging sign, as well as the fact that it remains above the 71 level, where we've seen prior support, and I didn't draw that in too well. The 71 level has been support, and right around that 20-day moving average as well. Still, a move down towards the 50-day moving average would not be an unhealthy thing. You can look at this and say maybe this is a big bearish flag as well when you look at the weekly time frame. So you've got to be very careful in here with these mixed messages from the various time frames. This market held up actually pretty well today, held above that 71.25 level, and so the range seems to be tightening in here. Maybe back above 72.10 or so, and holding above that could get the buyers interested once again. By the way, happy Mother's Day to all the mothers out there. If you're stuck for an idea for your mom for this Mother's Day, go to technicalanalysisbook.com. I'm sure she would love reading technical analysis using multiple time frames. Fascinating subject for most mothers out there. In fact, I know there are quite a few mothers who trade, so in all seriousness, it might not be a bad idea. The NASDAQ 100 continues to fight a battle here near this 200-day moving average, and it is holding for now. We can also draw the Fibonacci on this NASDAQ and see that we're it's right around the 50% retracement of the October-November highs to the March lows. This market has experienced a great rally here over the last 2 months. Big percentage move, 15, 18%. And now that it's getting up to these retracement levels and these prior levels of support, it pays to be very cautious up in here, in particular with your long trades. The diminishing volume indicates that that the buyers are, just not encountering a lot of supply, but their conviction isn't real strong relative to the large volume we saw, the fearful waves of selling we saw as the market was declining. So that a lot of times leaves the market in a position where it may continue to pull back. There's nothing here to suggest that on the daily time frame. It continues to look bullish in here. When we look at the 30-minute time frame, though, you see that this 49.30 level was a trouble area for it the last week and a half. The market did make this lower low and was unable to recover and make a higher high. So we've got these lower lows, and now just the support forming just around that $48 level. Today was a pretty quiet day for the NASDAQ. It was down 19 cents. But I do think that now that it's broken this this uptrend line, and it's actually kind of looking very similar to where that trend line is on the S&P 500 yesterday, where it was kind of you couldn't quite call it broken yet, and that's where we are with this NASDAQ as well. But I think breaking below and holding below for more than a half an hour, below that 47.90 to 48 level, I think that we can start looking at some of these more important levels on the downside at $47.20 a share, and then even as low as $46 a share. So I think you've got to continue to remain cautious in here. We've got a declining 5-day moving average, and odds usually favor a little bit further selling. However, if the market can get back above 48.70, then maybe we see further strength.